I've summed up my 5 takeaways and thoughts about this book in this video. I highly recommend you to read the original book of the author. Please share with me your opinion about this book in the comments below. The Fundamentals of Municipal Bonds by SIFMA is an excellent guidebook for anyone interested in learning about municipal bonds. The book covers a wide range of topics related to municipal bonds, including their history, structure, and tax implications. One of the things I like about this book is that it does an excellent job of breaking down complex concepts into easy-to-understand terms. Whether you're a seasoned investor or just starting, the book offers a wealth of information that can help you make informed investment decisions. The book begins by providing an overview of municipal bonds and why they are important. It then goes on to explain the various types of municipal bonds available, including general obligation bonds and revenue bonds. The book also covers the basics of bond ratings and how they can impact your investment decisions. Another critical aspect of the book is its coverage of the tax implications of investing in municipal bonds. The book explains how municipal bonds are taxed and provides examples of how tax-free municipal bond income can be used to enhance your investment returns. In addition to these topics, the book also covers the various risks associated with investing in municipal bonds, such as interest rate risk and credit risk. The book also offers tips on how to diversify your municipal bond portfolio and how to assess the creditworthiness of issuers. Overall, The Fundamentals of Municipal Bonds is an excellent resource for anyone interested in investing in municipal bonds. Whether you're just starting or have years of experience, this book is a must-read for anyone looking to make informed investment decisions. The book explains that municipal bonds are a popular way for state and local governments to finance public projects and services. Essentially, when a government wants to raise money to fund a new school, hospital, or other public project, they can issue bonds. These bonds are essentially loans that investors can buy, and in return, they receive regular interest payments until the bond matures, at which point they receive their principal back. For investors, municipal bonds can be an attractive investment option because they offer tax-free income. This means that the interest payments they receive from the bonds are not subject to federal income tax. Additionally, some states also offer tax exemptions on municipal bond income, making them an even more attractive investment option for investors looking to minimize their tax liability. Overall, municipal bonds can be a win-win for both state and local governments and investors. Governments are able to fund public projects and services, and investors can earn regular income while potentially reducing their tax liability. However, as with any investment, it's important to carefully assess the risks associated with investing in municipal bonds and to diversify your portfolio to minimize those risks. As mentioned in the book, there are 2 main types of municipal bonds: general obligation bonds and revenue bonds. General obligation bonds are backed by the full faith and credit of the issuer, which means that the issuer has promised to use all available resources, including tax revenues, to repay the bondholders. Because of this, general obligation bonds are generally considered to be lower risk than revenue bonds. However, they may also offer lower yields as a result. Revenue bonds, on the other hand, are backed by specific revenue streams, such as tolls, user fees, or lease payments. For example, if a city wants to build a new sports stadium, they might issue revenue bonds that are backed by the revenue generated from ticket sales and concessions at the stadium. Because revenue bonds are tied to specific revenue streams, they are generally considered to be higher risk than general obligation bonds. However, they may also offer higher yields as a result. It's important to note that not all revenue bonds are created equal. Some revenue bonds may be backed by more stable revenue streams than others, which can impact their riskiness and potential yield. As with any investment, it's important to carefully assess the risks and potential rewards of investing in municipal bonds before making a decision. Bond ratings are an important factor to consider when investing in municipal bonds. Essentially, a bond rating is a measure of the creditworthiness of the issuer, and it can indicate the riskiness of the investment. Bond ratings are assigned by independent credit rating agencies, such as Standard & Poor's or Moody's. These agencies evaluate the financial health of the issuer and assign a rating based on the likelihood that the issuer will be able to make timely payments on the bond. In general, higher-rated bonds are considered to be less risky than lower-rated bonds. For example, a bond with a AAA rating is considered to be very low risk, while a bond with AC rating is considered to be very high risk. However, higher-rated bonds may also offer lower yields than lower-rated bonds. It's important to note that bond ratings are not a guarantee of performance, and even higher-rated bonds can default in certain circumstances. However, bond ratings can be a useful tool for assessing the creditworthiness of an issuer and making informed investment decisions. When investing in municipal bonds, it's important to carefully assess the bond rating, as well as other factors such as the issuer's financial health, the stability of the revenue stream backing the bond, and the potential tax implications of the investment. One important factor to consider when investing in municipal bonds is the tax implications of the investment. As mentioned in the book, the interest income from most municipal bonds is exempt from federal income tax. This can be a significant benefit for investors, particularly those in higher tax brackets. In addition to federal tax exemptions, some states also offer tax exemptions on municipal bond income. However, it's important to note that not all states offer tax exemptions, and the specific tax treatment of municipal bond income can vary by state. It's also worth noting that not all municipal bonds are tax-exempt. While most municipal bonds are tax-exempt, there are some types of municipal bonds, such as private activity bonds, that may be subject to federal income tax. When investing in municipal bonds, it's important to carefully consider the tax implications of the investment, particularly if tax-exempt income is an important factor in your investment strategy. It's also a good idea to consult with a tax professional to ensure that you fully understand the tax implications of your investment. One important consideration when investing in municipal bonds is liquidity. Liquidity refers to the ease with which you can buy or sell an investment without affecting the price of the investment. In general, more liquid investments are considered to be less risky than less liquid investments. Municipal bonds are generally considered to be less liquid than other types of investments, such as stocks or treasury bonds. This is because the market for municipal bonds is not as large or active as the market for other types of securities. As a result, it can be more difficult to buy or sell municipal bonds quickly, particularly if you hold bonds issued by smaller or less well-known issuers. This can be a particular concern if you need to sell your bonds quickly due to unexpected expenses or changes in your financial situation. It's important to carefully consider your liquidity needs when investing in municipal bonds, and to be prepared to hold your bonds for the long term if necessary. It's also important to work with a financial advisor or broker who can help you assess the liquidity of your investments and make informed decisions about buying and selling bonds. Thank you for your interest in this book. Please leave your feedback on these thoughts in the comments below, or just put a like on this video. It will help me stay motivated and make more videos like this. In the description of this video, you may find links where you can purchase this book.